What is up, everybody? Welcome to the Crypto Cabin. My name is Tom, and in today's video we're going to be taking a look at Bitcoin. We are getting to a level that is a little bit on the edge, but things are still looking alright. So without any further ado, let's jump right in. Okay, so we are still in this descending channel here. So as you can see, we have bounced off of that descending trend line or descending support line. We bounced off of it once, and then we have just exactly bounced off of it and straight back up again. So I did manage to get another order filled down here at around, I believe it was 60,300. So my position size has increased slightly. I have another order set down here at around 59.5 or 59.6. So like I mentioned in my video yesterday, this trend line here is actually, if I go to the daily, the white trend line there at the bottom is actually support from all the way back here. So this is a multi-month support line, multi-month trend line. We bounced there one time, we bounced here, two, we bounced there, three, and it looks like we are very close here as well to bouncing again. I wouldn't get too nervous yet if it falls down a little bit more. So it could come down to this 59.4 level. If we break down too much further below this, then that might be a little bit bearish. So I've mentioned this ascending triangle as well here, which is normally bullish pattern. On the daily, you can see we're hitting consecutively higher highs and higher lows, so that is still bullish. The trend is still intact. If we maintain this support line, we are still in good shape here. So there are a couple price targets that we have not hit yet. This price target, a lot of people are calling this an inverse head and shoulders pattern right here, but it doesn't come from a downtrend. It's after an uptrend, right? So while it does look like an inverse head and shoulders pattern, I don't think it is a true head and shoulders pattern because it doesn't come down or it doesn't start from a downtrend. This is supposed to be a trend reversal to an uptrend from a downtrend. We have not done that. This target here is from that. So it's from the bottom of the head to kind of the neckline there, and then we take that to the top of the neckline and go up. So that price target is sitting right around 68.69, 68,850, $69,000. That's that price target. And then we still have this ascending triangle like I talked about. We are coming down to retest this level as support, like I said. If we do break out of this, here is the price target from there. So we kind of take the lowest point of the triangle to the top and move that over here, which is aligning up extremely well with the very top of this channel that we've been trading in for quite a long time. So if we go all the way back, technically there's a touch point back there, all the way back in October of 2020. You can see we hit the top of that channel here on January 7th, again hit the top of that channel on February 21st, and we've been playing around at the lower end of this channel. And so if we do break out, or if the breakout is confirmed and we do get a bounce up, this is obviously a price target, the $68,000 or $69,000 level, somewhere in there. But then we also have this price target up here at closer to 78,000 US dollars. I am being careful right now, so I have, like I said, I do have a smaller position. It's not the majority of my portfolio, or it's not the majority of my account right now, but I did, like I said, I did pick up a little bit more here. Almost got filled there. That would have been, if it does come down and I do get that filled, that would be great as long as it bounces back up. We do, however, have this ascending wedge that I've talked about before, right? Which is typically a bearish pattern. So if we do break out of this ascending wedge, which is forming with this support line as well. If we do break out of that, then the bearish target is the bottom of this wedge. So that would be down here. If I move this up a little bit, that would actually be down here at right about 43,000 US dollars, which happens to line up as of right now perfectly with the 21 weekly EMA on the daily chart here. So in order for this bull market to stay intact, we obviously need to stay above this level, which from this point here, wherever we are, right here, that would be a pretty healthy or pretty big correction, but nothing that Bitcoin has not endured in the past before. So this is a 28, almost 29% correction would be. We could still be in a bull market, even if it does come down that far. So that was a 28% correction. This correction from here all the way down to here was, just over 30%, 31%. So having those corrections of 30-ish% is definitely possible in a bull market in order to keep it in, and it will still stay intact. But what I am looking for here, everything is still in line for us to have a solid breakout to the upside. We just need to still be careful and be prepared for this downward action that could potentially happen. So I'm going to be setting my stop loss probably right around somewhere in the 50, like right around 58, maybe a little bit below, just to make sure that I don't get completely liquidated. So I'll be checking that out. But again, I'm looking for potentially for a bounce off of this 59.4-ish level, and then taking an upward trajectory from there to hit one of these price targets. Like I've mentioned in one of my videos before, I usually set a take profit at maybe 1 to 1.5% below this price target. So my take profit would be right around probably $68,000 for that price target. I wouldn't probably exit my whole trade, but I might take some profits at that point. And then for this one, if we do keep going up, I would likely take profits around the $77,000 range before we hit the top of that channel. And if we go to the shorter time frames here, we can see that yes, we have gotten some support on this trend line. This is still the same trend line from the 4 hour, so it's not fitting exactly perfectly, but you could drag it down here a little bit, and I think it was about there. But if it was where I originally had it, which I forget exactly where it was, we did get a bounce like right off of this support line down here. Like if we stay above 59, then we are still in very, very good shape and are geared up for a big run to the upside. But we will need to wait and see. It is the weekend. Weekends are sometimes quite volatile. The price can move up, move down a lot. What we really ideally don't want to see, we want to see a breakout, volume supported breakout during the week, not necessarily over the weekend, because that'll be sometimes there's those, everybody talks about the CME gaps. They aren't everything, but if we do get a big pump over Sunday, for example, and we have a gap to fill, they do tend to come down and fill those gaps. Not all the time. Not every gap has been filled to the downside, but every gap has been filled to the upside. So if we are down significantly, then we might come up to fill that gap if there is a CME gap. So if we go to TradingView, here's what I'm talking about by the CME gap. So if you just type in Bitcoin, we click on Bitcoin futures, and then it should be the first one. So BTC 1 exclamation point is what we're looking at. And when we come to the actual chart here, what you can see what I mean here is there's this gap here right in the 59. So that's why I've got that order set there as well. I mean, it obviously lines up with my other technical analysis as well, but this is also a potential reason why it could come down to fill that. This is on the 1 hour chart. You can see that after a weekend there was this one, and we opened up lower. The price immediately came up to fill it, and then came back down. This one hasn't been filled yet at around the 59. Like I said, I've got my orders at like 59.4, so that would perfectly fill the gap there. There is this one also down here that hasn't been filled, but there are a few others that were never filled as well. They don't always have to fill, like I said. This one did come down and fill. There's one from a while ago that didn't get filled either. I think it's around the 20, it's in the 20,000s. This one right here. So this one also didn't get filled. So it doesn't need to get filled. This one did immediately, but anytime there's a gap to the upside, thus far, since Bitcoin was at all-time highs, we have hit those price targets. There isn't a gap forming yet, but if we do, so they closed on Friday, they closed at 62.1. We are currently at 60,400. So if we stayed there, it'll open up again tomorrow evening, Sunday evening. So if we stayed around this level, we would open up down here, which would mean that there would be a gap to the upside. So that could potentially close up, or we could come down here to close and then go back up to close the top one. So like I said, they don't need to get filled, but everyone to the upside has gotten filled. To the downside, they fill the majority of the time, but not all the time. So those aren't necessarily things to take 100% and not base your trades off of that. But when that gap is aligning with this number here as well, for me, from my technical analysis standpoint, that 59.4, it's exactly aligning with the bottom trend line, with this horizontal resistance, and with the CME gap too. So we'll need to keep an eye on that as the weekend progresses here and heading into next week. That is what Bitcoin is shaping up to look like right now as of April 17th at almost 1 p.m. in, well, I guess Mountain Time. Thank you so much for sticking around to the end. Hopefully you all got some sort of value from that video. And as always, if you want to be updated when I post these new videos, make sure to go down, hit the subscribe button, hit the little bell notifications, and select all so that you get notified every time that I post a new video. That's all I got for today. Let's get it.